President Trump's sweeping global tariffs for more than 90 countries have come into effect.
It is import taxes or consumer sales taxes, i.e., you're paying it and I am paying it.
A few months ago, President Trump introduced one of the most aggressive tariff policies in modern U.S. history, a move that slapped heavy import taxes on goods from nearly 90 countries. This sudden decision has sent shockwaves through the global economy, pushing up prices, disrupting supply chains, and putting massive pressure on both developing nations and some of America's biggest companies. From consumer goods to technology and even agriculture, no sector has been left untouched. Many foreign economies are now struggling to keep their exports alive, while U.S. businesses are facing higher costs in uncertain markets. In today's video, we're going to break down exactly how these tariffs are shaking the foundations of global trade, which countries are hit the hardest, and how American companies are coping with the impact. So stay tuned. And if you want to keep up with the biggest economic shifts shaping our world, make sure you subscribe and turn on notifications so you never miss an update. When Trump's sweeping tariffs went into effect, they marked one of the most aggressive trade policy shifts in recent U.S. history, and the economic ripple effects were both immediate and far-reaching. These tariffs targeted a wide range of goods from steel and aluminum to electronics, automobiles, and agricultural products, and were applied to imports from over 90 countries. The idea was to protect American industries and reduce the trade deficit, but the reality was far more complex. Countries that relied heavily on exporting to the United States suddenly found themselves locked out of one of their largest and most profitable markets unless they agreed to pay significantly higher rates. China, the largest exporter to the U.S., was hit the hardest. Its manufacturing hubs in provinces like Guangdong and Zhejiang saw massive slowdowns as orders from American companies declined sharply. This directly impacted major tech and manufacturing firms, from electronics producers to machinery exporters. South Korea's economy took a hit as well. Samsung and LG, which depend on the American market for a large share of their sales, faced shipment delays and increased costs due to more expensive raw materials and components. In Germany, the iconic automotive industry, home to BMW, Mercedes-Benz, and Volkswagen, was forced to rethink production strategies as tariffs made their luxury vehicles significantly more expensive in the U.S., cutting into sales and market share. Mexico, a major supplier of auto parts, machinery, and fresh produce to the United States, experienced a sharp drop in exports, causing a chain reaction of layoffs in its manufacturing plants and farms. Similarly, Vietnam, which had been a rising star in textile and electronics manufacturing, saw its competitive edge eroded as tariffs narrowed the cost advantage it held over other countries. Smaller economies in Southeast Asia, such as Thailand, Malaysia, and Indonesia, also suffered collateral damage. Even if they weren't direct targets of the tariffs, their industries were part of global supply chains that ran through affected nations, making production more expensive and trade slower. The effects were not just overseas. American companies themselves were caught in the crossfire. Major retailers like Walmart, Target, Costco, and Home Depot, which source a vast array of products from Asia and Europe, faced steep cost increases.
Many were forced to raise prices for consumers, leading to inflationary pressures within the U.S. market.
The technology sector, particularly Apple, was hit as the cost of importing components from China soared. This made devices like the iPhone, MacBook, and iPad more expensive to produce, pressuring profit margins and in some cases resulting in higher retail prices.
American farmers were among the most vocal critics of the tariffs. Retaliatory measures from countries like China, Canada, and the European Union reduced demand for key U.S. tariffs.
Exports such as soybeans, corn, pork, and dairy products. Agriculture giants like Archer Daniels Midland and Tyson Foods saw sharp revenue declines, while thousands of farmers faced mounting financial strain, with some even forced to close operations. The energy industry also felt the pinch, as reduced global trade slowed demand for U.S. oil and liquefied natural gas, impacting companies like ExxonMobil and Chevron. The shipping and logistics sector was another casualty. Companies like FedEx, UPS, and Maersk reported declining international shipping volumes, with global trade routes disrupted and freight costs rising. Even the manufacturing sector within the U.S., which the tariffs were intended to protect, faced higher expenses for imported raw materials, from metals to specialized components, making it more expensive to produce goods domestically. Perhaps most damaging of all was the psychological impact on global markets.
Investors, wary of escalating trade wars, began pulling back from emerging markets, causing currency instability in countries dependent on exports.
Nations like Kenya and South Africa saw reduced orders for raw materials and agricultural products, creating job losses and slowing economic growth. In short, what began as a policy aimed at protecting U.S. industries ended up creating a chain reaction across the globe, from the factory floors in Shenzhen to the farms in Iowa, and from the auto plants in Bavaria to the textile mills in Vietnam. The shockwaves of Trump's tariffs were felt everywhere. This wasn't just a shift in trade policy, it was a reshaping of the global economic landscape, leaving countries and companies scrambling to adapt to a more fragmented and expensive world market. At the end of the day, what we're seeing is not just a trade policy, but a chain reaction that has reshaped the way the world does business. From the bustling factory floors of China to the farmlands of America's Midwest, from the luxury car showrooms of Germany to the shipping docks in Mexico, the effects of these tariffs have been felt everywhere. Companies are cutting costs, countries are rethinking trade strategies, and ordinary people are paying the price at the checkout counter. This isn't just about politics or economics, it's about real lives being changed in ways most of us never see. And as this story continues to unfold, one thing is certain. The world is more connected than ever, and when one link in the chain is disrupted, the impact is felt across the globe. We'll be here to follow it, to break it down, and to show you the parts of the picture others might miss. If you found this video helpful and you want to stay updated on the biggest stories shaping our world, make sure you hit that subscribe button, turn on notifications, and join us for the next deep dive. Because the next chapter, it's already being written,